A very good morning to friends, valued investors, and everyone joining in. Welcome to our fifth Investor Day webinar of the year, brought to you by BR Capital. I am Fong Wing Long, and I'll be your host of today as we explore the topic, Demystifying Family Office in Malaysia. This session is designed to help investors, entrepreneurs, and professionals understand the evolving landscape of family offices, their role in wealth management, and the prerequisite for setting one up in Malaysia. Before we begin, kindly take note of our standard disclaimer. The information presented here is only for educational and informational purpose and should not be construed as financial, investment, tax, or legal advice. Please consult your own advisors if need be. Before we dive into the main presentation by our guest speaker from Ernst Young, let me briefly introduce what BR Capital is about. BR Capital is a debt fundraising and investing platform. For companies looking to grow their business, we help them to fundraise by issuing a debt instrument known as investment notes that function similar to a bond or sukuk. For investors seeking stable returns, they get to invest in RAM-rated investment notes through our platform. Our issuers come from the largest SME segments or mid-tier companies as opposed to smaller micro businesses due to our minimum fundraising amount of 5 million ringgit. They can be listed or unlisted companies and even pre-IPO companies. At BR Capital, we are reshaping how everyday investors access debt-based investment opportunities. One, we are regulated and trusted, having been registered with the Securities Commission and proudly supported by Bursa Malaysia and RAM Holdings. Two, we're accessible to all, offering a low entry barrier. You can start investing from as little as 100 ringgit. Whether you're a seasoned investor or just starting out, our platform is designed to be inclusive and user-friendly. We also offer a competitive cost structure for investors. Pay an upfront one-off subscription fee of 0.3% on your investment amount, with the fee capped at just 500 ringgit. Essentially, you pay just 30 cents on every 100 ringgit invested until you reach the cap. Thirdly, we offer balanced risk-return opportunities. Our offerings target yields of between 6 to 10% per annum, with short holding periods ranging from 1 to 3 years. You get a balanced risk-return profile, ideal for diversifying your portfolio. Fourth, we conduct a comprehensive credit risk assessment internally as well as externally by RAM ratings so that you can invest with confidence. All our issuances are rated by RAM. Our platform further offers enhanced disclosures to help you make informed choices. Last but not least, we give you access to a secondary market that gives you the option to buy, sell, or transfer your investment notes. So visit us, learn more, and register at brc.bursamalaysia.com. We are also excited to spotlight our latest investment campaign, Project Eco Tranche 2, featuring Fibromet and Berhad, a leader in soil erosion control solutions. Fibromet is a public listed company on the ACE market of Bursa Malaysia and a pioneer in erosion control solutions. With decades of experience, the company has built a strong reputation for delivering end-to-end erosion control solutions. Their products are widely used in large-scale government projects, including highways, slopes, and land rehabilitation. They provide integrated solutions. On top of manufacturing, they also provide comprehensive project support from design, consultation to on-site installation. With in-house R&D facilities, Fibromet continuously innovate to enhance project design and build capabilities tailored to local market needs. Backed by over 50 years of collective experience from its founders, Fibromet has cultivated strong relationships with government agencies, contractors, and industry stakeholders. The key highlights of the campaign are as follows. The issuer is MTS Fibromet Sdn Berhad, and the investment note comes with a corporate guarantee from Fibromet and Berhad. The investment note pays a profit rate of 6.75% per annum, semi-annually. It has a tenor of 18 months and ratings of R3 from RAM, indicating adequate safety. Now, as part of this campaign, We are offering a 30 ringgit cashback to early investors, and it's incredibly easy to qualify. Here's how it works. Be among the first 300 investors to invest a minimum of 1,000 ringgit in a single transaction, and you'll receive 30 ringgit cashback directly into your BR Capital wallet after the campaign is successful. And that's it. Just invest and enjoy your reward. It's a great way to boost your returns instantly. So if you've been considering investing in Project Eco Tranche 2, now is the perfect time to act. I would now like to welcome Mr. Ng Keng Seng, CEO of BR Capital, who will be introducing our guest speaker. Over to you, Keng Seng.
Thanks a lot, Weng Lung. Good morning, everyone. I'm Keng Seng from BR Capital. It is really my pleasure to introduce our distinguished guest speaker for today, Mr. Bernard Yap. Bernard is the Malaysia private tax leader and a partner at Ernst Young Tax Consultants Sdn Bhd. He leads the private client services and financial services within EY Malaysia tax practice. Bernard brings deep expertise in compliance, regulatory, and consultancy engagement, working closely with financial institutions, entrepreneurs, and business enterprises. Importantly, Bernard advises high net worth individuals on establishing family office structures with a focus on formal governance and succession planning. He is also a regular speaker at industry conferences and forums, sharing insights on a wide range of tax-related topics. So please join me in giving a warm welcome to Mr. Bernard Yap. Bernard, the floor is yours. Thank you.
Thank you. Thank you, Keng Seng. Firstly, obviously, very much appreciation to BR Capital for inviting Ernst Young and myself to be a speaker here and sharing our knowledge and experience in terms of family offices here in Malaysia, but not only just in Malaysia, but also we are quite established for the ASEAN market as well. So very quickly, I thought today we're just going to talk about in terms of the family office. That is, you hear a lot of the buzzword of family office coming up in Malaysia. But before that, I thought we look at an overview of the recent trends as to why family offices are now becoming more and more preferred structure, not just in Malaysia, but globally as well. Firstly, I think if you look at it, post-COVID, we've seen a lot of changes from a political shift perspective. Main rationale is because of the change in leadership in certain countries. Fundamental fiscal policies have also changed over time because of trying to make sure that countries that have spent significantly to counteract the COVID are now changing their fiscal policies and their tax policies in order to increase tax revenue within the country. Obviously, you look at the second part on the right-hand side, the macroeconomics is also very much impacted. We've seen change in the political situation with the new president of the United States. We've seen a lot of changes globally. The supply chain has also impacted because of the tariff announcements, and that's going to continue. And we expect a lot of these disruptions will continue within, not just in Malaysia, but globally. And then a lot of changes, depending on how you look at it, whether it's in favor or whether it's going to have an impact in terms of the way we do our business, is also going to be, also needs to be evaluated. Here you see a lot of technology play has come into play, and hence, therefore, the focus on how business organization and business enterprises work today is also looking at improvising and making sure that they are much more efficient in terms of delivering their business promises to their stakeholders. And when I mean stakeholders, it's not just generating the revenue for their own requirements, but also in terms of the stakeholders and also regulatory support that is needed. And I think then, therefore, when I talk about regulatory, you see a lot on the bottom left-hand corner, a lot of tax new rules have come in. We've seen, how the global minimum tax of 15% is now playing a way in terms of how we run business operations around the world. E-invoice have also come in to make sure that digital data is shared not just within Malaysia, but across with other jurisdictions as well. Because a lot of tax officers around the world wants to make sure that they are collecting the right amount of taxes, notwithstanding globalization and our ability to now operate not just in Malaysia, but around the region as well. And I guess ESG plays a very important role as the way we do our business, not just because we want to be committed to make sure that we are green, we are able to be sustainable from a social perspective, but investors, regulators also look at ESG very thoroughly. Moving forward, you see a lot of disclosures in the financial reporting, in their annual reports, and even on a regular ad hoc announcements that they participate in a lot of these activities are actually meant to balance up not just from a future business generation perspective, but also making sure that they are sustainable on a long-term basis. So with that, I think it sets the trend as to why a lot of entrepreneurs and business organizations look into how they want to run their business operations and be much more focused to ensure that succession planning will be there. So if I may then, let's go to the next slide. Yeah. So this is a very traditional, simplified structure. If I may go straight into what a normal single family office is. I have to make sure that, when we talk about single family office, we're talking about having the structure for one family, and it's not for multiple families, because very much focused to make sure that at the start of the regime, Malaysian government is focused on making sure that we establish ourselves to make sure we manage the funds and the business for one single family. Okay. Now, in the requirements for the SFO framework, you will see on the left-hand side, there is a management company to run and manage the funds. And on the right-hand side, there is the SFOV, which is the single family office investment vehicle. Okay. And at the bottom, you'll see all the assets investments that they will be investing in, and it will be supported by the management company to run and manage the assets, grow it to make sure that they are sustainable into the future. Very important as well, as we set our sights into establishing an SFOV, you got to think on top as well. How should the shareholding structure be? At the end of the day, a lot of business entrepreneurs that I talk to, they are all looking into succession planning as well. There's two things that is certain in life: death and taxes. So making sure that one, if we're no longer around, how do we make sure that whatever that we have established, whatever assets, investments that we have generated, we make sure that we are able to retain the value, grow it, and making sure that our second and third generation will be able to benefit from it. So you can see on top of it, there are various different structures that can hold the SFOV and the SFO management company. You can have a normal single holding company that will do it, and then the family members will actually be shareholders or equity shareholders of that holding company. Or you can have the family members holding directly into the SFOV and SFO management company. And if you want to think more longevity and from a long-term perspective in terms of succession planning, you can also consider a family trust, which means that at the end of the day, these are the kind of flexibility that will be available for you. And as this SFO framework is governed under Securities Commission is flexible in terms of what fits your requirements, what fits your family needs, and especially more important, making sure that you are going to be able to sustain continuously into the future. We're not just looking at one level of generation. You got to be very comfortable that this structure will not just withhold the current level of economic circumstances, but also continue to be there. So more important, if you look at the one on the right-hand side, obviously earlier I talked about the SFOV, making sure that this is the investment corporate vehicle that will undertake all the investments that are under the requirements and pre-approved by SC in order to make sure that they meet the requirements there. The SFO management company is actually a corporate vehicle that will provide fund management services to the SFOV. One main reason why SC has required that the SFO management company to be separated from the SFOV is because they want to make sure that they will now want to grow and establish the fund management industry in Malaysia. As you can see in the regional investment jurisdictions like Hong Kong and Singapore, we've seen an increased growth of the fund management industry. And this is where I guess Malaysia also wants to have a play in this industry, especially now with globalization coming through you see a lot of the shift in terms of the supply chain. We are seeing a lot of foreign investors coming into Malaysia, and obviously the level of confidence that they want on our fund management services to be able to support their requirements, not just in Malaysia, but from an international fund management perspective as well. So that's going to be very important to make sure that we have the credentials, we have the expertise, and we also have a proper framework that will regulate the fund management services in Malaysia. Okay. With that, let's go to the next slide. Now, next slide is obviously in terms of the incentives that is available for you. The first one is, if you look at it on the left-hand side, if you get approved for the SFOV in Malaysia, you would be able to enjoy 0% tax rate for the next 10 years. Now, I've been doing this tax business for the last 30 years. This is one that the government actually automatically gives you a blanket approval for concession of a period of 10 years. Normally, in all the other incentives that you have through MIDA, MDEC, or directly from Ministry of Finance, it's normally at 5 years, unless your investments are way above 1 billion ringgit, then you may be able to consider getting 10 years. But now automatically getting a 10 years is already available, and you would have certainty from a tax perspective in terms of the way you run your business and the way the SFOV is going to manage. But if you increase the requirements and the standards that is required for the SFOV, you can even get up to 20 years. So the first 10 years, you meet the requirements, and I'll talk a little bit more in terms of the expected requirements for the next 10 years, but you will get 10 plus 10, which means that 20 years of concessionary tax treatment will be given to you. Why that is important? Because the investment activities today that you do will constantly be changing. You will go from normal trading in shares on Bursa, going into liquid assets, going into cryptocurrency. A lot of all these things will change. And with these changes into the future, what you got, for at least from a confirmation and certain perspective, is a 0% tax rate. Yeah. The second one is you would also get capital gains tax exemption for any transfer of your unlisted shares into the SFOV. You would appreciate that 2 years ago, the government has introduced capital gains tax, and now they understand that this requirement is going to be a cost of transaction, and hence, therefore, they've also provided for CGT exemption on the transfer of unlisted shares into the SFOV. The third one is actually stamp duty exemption for any of the qualified assets that they have proposed, and we'll talk about the qualifying assets and investments in the next subsequent slides later. But more important, stamp duty exemption is available, right? So at least when you establish the SFOV, the government is trying to encourage and ensure that whatever investments that you have, you put it into a proper framework structure, which will come with all these exemptions. What is important on the right-hand side is actually the qualifying conditions. Obviously, the SFOV has to be a new investment vehicle. So you got to establish a new holding company for that purpose to undertake that investment. And that new company will need to be registered with ST as well. You then have to make sure that the SFOV will have at least minimum 2 full-time Malaysian tax resident employees. And they have to be based in Forest City as well. So that's going to be very important, because the main objective of the Malaysian government establishing the family office is to ensure that they are able to grow Southern Johor as well. And a lot of us will look at it that, are we competing with Singapore? Actually, from my perspective, the Forest City structure is going to be complementing Singapore. And if you look at it later, there at the right-hand bottom column is that the requirement is only for the SFOV to invest 10% in Malaysia. You can invest up to 90% overseas. So why is that important? Because now you do not need to establish an SFOV in Singapore in order to enjoy the ability to invest overseas. You can use the SFOV in Forest City itself to be able to enjoy the investments both locally and offshore investments as well. Okay. The third one is that you need to make sure that your AUM is at least 30 million ringgit. And if you can increase up to 50 million ringgit, then you will be also entitled to the plus 10 years extension for the exemption. And it's very important, like I said earlier, you have to be located in Forest City itself. And there is a designated Pulau 1 which would be the newly special financial zone, similar to if you look at other countries in Shenzhen, no, sorry, Shenzhen, in Shanghai itself, they have their special financial zone there that has grown over time because of the fact that they promote and making sure that substance are located and based out of that region. And more importantly, next is that if you need to ensure that you spend a minimum operating expenditure of 500,000 ringgit annually. But if you incur and spend more than 650,000 ringgit, you will also then subsequently be eligible to get the extension of your tax exemption period for another 10 years. Okay, so these criteria is very important to make sure that on an annual basis, you need to comply with it. And that is also required to be validated by an external advisor upon submission to the SC as well on an annual basis. Okay, let's go to the next slide, which would be talking about the qualifying investments. Earlier, I talked about the fact that 90% of your investments can be invested in Malaysia or outside Malaysia. And these are the list of the type of investments that you can invest in, whether locally or abroad. I want to bring your attention to actually right at the bottom, any companies that is incorporated under the Malaysian Companies Act, you can also transfer it into the SFOB and qualify as part of the AUM. However, it does not include companies that is specifically incorporated to hold real properties. So if you're an RPC company under the RPGT Act, real property company which only holds properties in your bank of investments, then unfortunately it doesn't qualify under AUM. But if you have a business profitable operating company, then you can transfer that into the SFOB and it will also still qualify as part of the AUM. And then on top of that, these are the kind of investments that are pre-approved by SC in order to ensure that you can continue managing the AUM minimum level of 30 million ringgit or 50 million ringgit. Okay, these are the list of investments that you can today, if you want to go into more details, SC has actually set up a specific page on their website that will list down in more detail the type of investments they are there. If we may go to the next slide, that will be the qualified investments for the 10% that is required to be invested. And why this is important is because when you transfer in your 30 million into your SFOB, the SC expects that at least 10% of these investments must be new investments coming into the SFOB. What it means then basically is that you would have to have the AUM, in this case, if your AUM is at 30 million ringgit, 3 million of it, which is 10%, must be invested in this kind of new local investments. All right. So it is also as a way to boost our capital market to ensure that we continue to be vibrant and can be competitive against Singapore and also the Hong Kong Stock Exchange. Okay, so it's a way to ensure that at the end of the day, we promote this kind of equitable investments into your current SFOB, but also earlier slide give you the flexibility of investing 90% of your AUM in other investments in Malaysia and overseas. But this 10% minimum is to be in Malaysia itself. Okay, so I don't think it's a very challenging criteria or condition that needs to be fulfilled, but I see this as very encouraging because it will actually boost up our capital market. So the next slide we go into is very quickly, not to bore everybody, it's a quick comparison of the SFOB today that is available in the region. You see there is, I put up Singapore and Hong Kong as well, and there's also a new one coming up. I think they may have just announced that it's also an SFOB in Bali itself. Now that's going to be very interesting. It's going to be located in Bali, Indonesia, very much a tourist island, and whether it will actually succeed in the future. If you compare it to Malaysia, Singapore, and Hong Kong, which is very much a financial and economic investment center, And hence, therefore, I guess the barley flavor actually combines both mix of lifestyle balance, business together with also a bit of vacation for the business entrepreneurs and business enterprises. You will see across the criteria on the left are very similar across the three jurisdictions. What is different is obviously only going to be mostly focused on the quantitative test, as in the amount of AUM that is required in each of the countries under their own respective jurisdiction and their legislation. And also, depending on the AUM, each country will also provide you the different level of taxation or the different level of tax exemption available for you. Then, depending on their preference and depending on their fiscal policy in terms of what they want to promote, the list of investments that is qualifying and non-qualifying under the family office in each of the jurisdiction will differ, right? What I would say here as well is that if you look at Singapore and Hong Kong, they also provide work permit passes and also long-term residential passes for the family members who will be working or residing in those two countries. Malaysia is also committed. They will also provide clearer guidelines once this is officially launched as to how, if there are foreign entrepreneurs, foreign business enterprises wanting to set up FO in Malaysia, in Forest City itself, how would their family members also qualify for residential passes here in Malaysia? So that's also going to be very important in a way to encourage and develop foreign investors coming into Malaysia for this purpose. And this is also very important, especially because of the change in the tariff regime in US. You can see a lot of the change and relocation of the supply chain into ASEAN region, and hence Malaysia wants to be one of the first few countries to be able to attract and invite these relocation of the supply chain into Malaysia. And hence, therefore, what is important is that the main rationale we're setting it up under Southern Johor is the availability of the infrastructure today that can meet the requirements of this shift of the supply chain. If you think about it, Forest City is located right next to the ports, and we're not talking about just the Malaysian ports, but there's also the usage of the Singapore ports as well. And with the introduction of the Southern Johor and Singapore Economic Zone, it would actually help to facilitate movement of goods between Malaysia and Singapore. It's something that, if you look at it, the Singapore and the Hong Kong regime doesn't have in place. I say this very importantly is because while Singapore may not have the real estate to establish factories, warehouses, to facilitate the new shift in the supply chain, Malaysia, Southern Johor will have it. And hence, therefore, if the foreign investors do set up their operations in Malaysia, the SFOV will help to facilitate these investments. Or not only that, but also help to complement back against whatever facilities that's available in Singapore as well. So I take it very positive that this is actually a complementary framework that will also not just benefit Malaysia, but also Malaysia having the access to a lot of the facilities in Singapore as well. Okay, so with that, that's a very quick snapshot of the comparison between Malaysia, Singapore, and Hong Kong. Singapore and Hong Kong also have continued not just to maintain it as a single family office. They have also now, because they are much more mature, they started FO much earlier than us here in Malaysia. Now they have gone to multiple family offices. So we will see, and I'm confident that we will see SC establishing, moving out from SFOV to multiple family office structure in the future. Okay, and that's going to be important once our expertise, our knowledge in the fund management industry has increased over time, and we will be then able to support multiple family office structure in Malaysia itself. Okay, the next one is very important. Terms and conditions of the relationship between the SFOV together with the management company, the fund management service company itself. Okay, why I say this is important is because obviously governance will play a very important role in terms of how these two entities are to be established and how the roles and responsibility in both of the entities are clearly outlined and designed, making sure that there is no disruptions in the way that operations are to be undertaken, and very clear, distinguished roles that will then facilitate you getting the necessary tax approvals and tax exemptions that you wish for. Okay. Obviously, the first one on the left, you see that SLA, the service level agreement, must be in place. That's very important, not just to facilitate the roles and responsibility, but also to ensure that transfer pricing from income tax perspective is also going to be met. Therefore, the list of the scope of services that you want to provide to the SFOV itself must be clearly outlined, and the kind of in-depth services that you want to provide can be inside the appendix to the SLA agreement. But the basis of charge, the basis of how you want to allocate the cost back to the SFOV must be clearly outlined in the SLA itself. All right. Now, the next one is that the SC expects that the operations and everything to be carried out in Forest City. In our discussions with the SC also has stated that once this framework is in place, once the SFOV and SFOMC has been established, they do plan to carry out audits and also visits to these entities which are supposed to be based out of Pulau 1 Forest City, and they expect them to be working full-time there. So in substance, you need to make sure that not only you fulfill the requirements of hiring the right number of people in the SFOV or SFOMC company, they must be established and working out of the Pulau 1 Forest City. Unlike Labuan has a very unique way of making sure that they succeed in order to get the exemption. Labuan is the activities have to be carried out in or through Labuan. So the through Labuan or through Forest City is not available here. They want physical operations here. And to me, I think that's very important because around the world, OECD is now trying to promote to make sure that you want tax incentives, you want tax subsidies or grants, you got to make sure that the substance requirements are met. And one of the best ways to make sure that substance requirements are met is to have the SFOV having the office based in Pulau 1 and have the people also working in that office in Pulau 1 itself. I think the few questions that we've raised with SC as well is whether the employees needs to be staying and residing in Forest City itself. At the moment, my view is I don't think it should be, because you've got established cities within Southern Johor itself. So you've got JB and the rest of the other suburbs that will be able to support the residential area and doesn't really need to force the employees to be residing in Forest City. But we will have to wait for that to come out to ensure that at the end of the day, the office and the people must be working in Forest City. We'll see whether the residential have to be in Forest City itself. The SFO management company can also hire consultants and advisors to help them to manage the AUM for the SFOP. So if the family members do not have the necessary skills and sets experience, they can outsource it to an external advisor to be able to help them. On the right-hand side, you would also see that you can have also collaborative management agreement in place, notwithstanding the fact that the SFO management company will provide all the stipulated scope of services that I showed you on the first box itself, but they can also provide incidental services to the family members within the SFOV organization itself. Again, this is very limited to just services that is provided to the family members itself. Yeah. And then any other non-direct related management services, investment services that is required, you can outsource them. For instance, accounting, legal, and any other support services that is required to ensure that the SFOV is run and managed professionally and properly. You can outsource that kind of roles to third parties. Again, what SC and the government is looking at is proper governance, ensuring that at the end of the day, we are here to make sure that the longevity of the SFOV is there. We're talking to make sure that we provide confidence to the business entrepreneurs and the business enterprises that they will be able to succeed into future generations. It's not a very short-term focus. I think a lot of lessons learned in other jurisdictions is that once the SFO in those foreign jurisdictions completed their tax holiday, they then wrap it up and move to another jurisdiction. This is not the intention of the Malaysian government. What they want is longevity. What they want is the continuity and the ability for second and third generation to be able to benefit from this SFOV. Okay. With that, let's go to the next slide in terms of the process to get the tax certification. Firstly, very much important, the guidelines will be issued by SC in the near future, but a lot of times now, bankers have already been working with families to start consultation with SC. Why this is important is because SC is also looking at discussing with family members or family officers or business entrepreneurs in order to get their understanding, what is their requirements, what are their needs, why are certain areas or certain conditions that may not be practical from a business perspective. Hence, a lot of feedback are being generated, not just through the family members or the business entrepreneurs, but also from other stakeholders, people like from Bursa, us and Ernst Young as your advisors, the lawyers, the bankers, even from trustees as well and fund management services company. And hence, therefore, a lot of experience that we had, not just in Singapore, but globally as well, are also being shared with SC to make sure that we are going to succeed once it's been officially launched. So we got to be transparent with SC in terms of how we plan to establish the SFOV, how we plan to incorporate SFO management company to be able to support the investment vehicle. The experience of the people that will help to run the SFO MC company itself is also going to be very important in terms of their level of expertise and the years of experience that they have. So once that comfort can be established with the SC, together with the type of investments that you plan to put in, I guess it's also very much like a learning curve for SC because there are new investments, new innovative or hybrid investments that continue to be established by bankers, by corporate advisors. Again, if you can share this with SC and they can add on to the list of the approved investments, that will also help them to ensure that we don't fail, we don't be seen to be not complying because a new set of investments are coming in and they're not in the approved list, and therefore do we then not able to enjoy the tax exemption. So again, that kind of consultation, I always felt that it's very important to be on both ways between the taxpayer or the SFOV itself with SC. Now, once the consultation is established, completed, then the entrepreneur, the business entrepreneur himself will need to set up the new SFOV and the SFO management company. That has to be registered with SC, and then SC will look through in terms of your business plan as to how you plan to carry it out, whatever that you have shared during the preliminary discussions and consultations with SC, that will be officially submitted through a business plan to SC. With that in mind, and they're happy with what you are committed to do, then they will give you a conditional approval. That conditional approval will obviously come with certain conditions that ensure that whatever you wanted to do, you then transfer it into the SFOV or SFO MC itself. Again, that conditional approval is also very important because that would be the main documentation for you to then submit it together with the inland revenue to get all your exemptions. Earlier, I talked about under the SFO framework itself, you are entitled to capital gains tax and also stamp duty exemption. So with that in mind, then you obviously need to ensure that you take that conditional approval letter and submit that together with the inland revenue to get to enjoy your exemptions. Now, once that assets investments have been transferred into the SFOV, SFO MC has also appointed and employed the right people to run and manage the AUM for the SFOV. What you need to do on the annual basis is to make sure that all the documents, all the filing is done. It's going to be very important because your timeline is going to be very tight. You need to ensure that all the annual certifications are submitted to SC and work with SC to ensure that they issue you with the certification letter, because filing of the tax returns is 8 months after your financial year. So in between the 8 months, you need to work with SC to get the approval letter out and to ensure that at the end of the day, you will be able to enjoy the tax exemption. And when I meant the tax exemption, I meant ensuring that the certification letter from SC is issued in time at the point of submission of your tax return, which is 8 months from the financial year. Okay, and so this is going to be required on an annual basis. So if you are lucky and you meet all the conditions, you need to do at least 20 times. The 10 plus 10 years, you need a certification to be undertaken and then submitted to Inland Revenue on an annual basis. Okay, that's the last bit of my presentation. That's the last of the process required. Obviously, you will appreciate that, the next 20 years, there's the annual certification. I think things will change. New rules will still come in. New conditions will come in. You got to ensure that you continue to keep abreast of all these new conditions. With that, thank you very much. I'm going to hand it back over to King Sing, who will facilitate Q&A.
Thanks, Bernard. Really appreciate the insights. And really, it's a good thing that Malaysia has launched a new SFO regime. So I mean, to the audience, if you have any question, do share your questions in the Q&A box, and I'll just read out some of the questions. So maybe Bernard, just to start off with the first question from the audience, essentially looking from cost benefit analysis and scalability, whether it makes sense or not. I mean, you have shown that there are procedurals, there are requirements, there are eligibility, whether that worthwhile. So the audience has asked, at what asset levels does establishing a family office become economically viable compared to alternative wealth management structure? And how should families evaluate the ongoing cost effectiveness as their wealth and complexity evolve? Obviously, this person looks like he's from wealth management advisor, So, Ms. Bernard, to you.
Okay, I'll answer this one from a tax perspective. I think Weng Long looks like he's very interested one day to come and answer the question. But I think let's look at the first point. The main objective and the main incentive you get is actually going to be a tax exemption for the next 20 years. Then you look at the assets today, where you earn income and generate income, where you can enjoy the tax exemption, you would then want to transfer into it. So one example is it's always going to be a very qualitative tax, which is trading of shares over Bursa and trading of shares. Is that a business income or is that a passive investment income? If it's an investment income, capital in nature, you don't pay tax. But if you trade regularly and often enough, then it becomes income tax. So obviously, if you are trading quite frequently, you want to put that into the SFOV. One is obviously using the right bankers and everybody to make sure that you retain the value and grow it. By growing it means you make some gains. At least for comfort, the next 20 years, the gains that you got out of this trading, you will not be subject to tax. So that's one. Number two, some of the hybrid investments and everything, you don't know whether it is equity in nature or it is revenue in nature, depending on it. So again, with that uncertainty in terms of the tax treatment, why not transfer it into the SFOV, because it'll give you the tax exemption. But again, yes, cost benefit analysis, your tax liability must be at least 500,000 ringgit because you need to spend minimum 500,000 in the SFOV. So obviously you need to balance that up. But what I would say from a succession planning itself, 20 years of guaranteed tax exemption is something that until today, like I say, as a tax advisor, I've not seen it before.
Thanks, Bernard. I guess talking about investments, we briefly mentioned, and then you've briefly shown the slides about what qualifies, that certain AUM that's required. A lot of family offices, as I understand, they do have money lending licenses. through the housing development. That's how they lend through the group and all those. Can interest income from money lending qualify under tax exempt?
I think that's a good one. At the moment, I don't see it as one of the activities inside SC, and I think it's something, like I said earlier, the continuous consultation with SC, right, is going to be very important. If you plan to, if you are very unique, you have the money lending license and you plan to do it, yes, why not? Why not discuss with SC and have that in place? I can appreciate where SC is coming from as well, because this doesn't fall within their jurisdiction, because it's not also this money lending license, if I'm not mistaken, doesn't fall within SC or Bank Negara as well, right?
Yep.
So again, it has to also have some form of collaborative G2G arrangement in ensuring that the respective government agencies are in support, and if they are in support, then only they can put it into their approved investments or approved activities.
Right. The next question is, can it be a Labuan entity at the holding company level, including Labuan Foundation, qualify for this?
Yes,
Looks complicated.
No, it's not complicated. Can say yes, you can. Today, yes. Well, earlier, I think in my second slide, I talk about you can have a trust, you can have a holding company, or you can have the family members owning the SFOV directly. Labuan Foundation is also an alternative option that can be used to hold the shares in the SFOV and the SFOMC as well. So there's no restriction on who the shareholder will be.
Right. Getting a lot of technical, really technical. I think they are trying to, probably these are representative from the family offices. Can the SFO provide management services to companies within a group controlled by the family members? Looks like a very complicated family. Yeah.
At the moment, it's supposed to be fund management services established for that. On the right-hand side of the box, if you recall, I said that if you want to provide any ancillary services, not direct fund management services to the investments that the SFOB has, but more working routine support operational services to me, if you fulfill all the other conditions, the AUM 30 million and all those things, the two people and everything, you want to hire more and put it in, you need to consult with SC to get that new additional activity to be approved in your mandate. But you need to start with their basic requirements, the 30 million or 50 million, the two people hiring with the right expertise. If you meet all those requirements, you want to do more, I'm sure SC will not stop you. You want to do more, but you need to do their basic needs and requirements first.
When you say fund management, you use the term fund management. Of course, that is a SC term. You have to be licensed. Or do we need to be, or does the SFO, the representative, needs to sit for exam? Typical the investment management. Do we need to sit for exams or certified to be doing fund management?
At the moment, if it's solely for only the family members, the answer is no. You don't need to.
Right.
Because, like I said, they do not have open it up to multiple family office structure. So this management company is solely to support that one family, no one else.
So that sort of explains the single family office. Once you have multiple family office, then you're literally an advisor.
Correct. That's right.
Okay. The next question, again, very technical. Do the 10 years plus 10 start from the SFOV inception, or is there a deadline of 2034 for the first 10 years?
Oh, no. They start from the year you submit, and when the SC approves for your SFOB, that the year one starts on the date of approval issued by SC. So if you submit it in 2028 and then it's approved in 28, then the 10 years starts from 2028 until 2038.
Understand. Okay, the next question is there a possibility Again, I think, Bernard, you mentioned there is this consultation that need to be done with SC, but I think this person is asking any possibility that the qualifying condition for SFOV tax incentive be lower in the near term. For example, the minimum 500K, the minimum 30, whether, can talk lah. That's what I think the person is saying. Yeah.
I think it's going to be very hard. It's already much lower than Singapore and Hong Kong. I don't think SC is going to lower it. I see in the future it may increase. So those ones that wants to apply for the SFO approval now, at least you're looking at 30 and 50 million. But in the years to come, just like what happened in Singapore and Hong Kong, actually the threshold increased over time, because they also want to limit in terms of the quality of the SFO coming into Malaysia.
Okay, thanks. I think this question is also, can SFOV deal in shares, investment dealing other than just investment holding? I think the answer is yes, right? You can trade the shares of Bursa, that should be okay. The next one is, does the tax exemption extended to RPGT? I believe so, right?
Yes, it is, but you have to remember it is only applicable to properties within Forest City. So your bungalow in KL, if you want to put it inside there, it will not qualify for the exemption, and it will not qualify as part of your AUM, because they only want properties in Forest City to be the designated approved property only under the AUM.
So the only way I can do this is through a potential REIT lah. If I have a REIT assets, then naturally it's a capital market product. Okay. As for the holding companies, and another question, that are into manufacturing business owned by a single family, does it make sense to transfer it to SFOV to enjoy the tax exemption? Manufacturing business, I don't think that would applicable, right? Because it's a business income, right?
So, King Seng, the manufacturing company itself can be transferred into the SFOV because it's not a real estate property company. It's an actual business activity.
Yep.
But you have to ask yourself, today you don't pay any tax on the dividend coming out.
Yep.
Other than the 2% dividend tax for individuals.
Yep.
But the dividends are not subject to tax if it was already owned by a holding company and everything. Yep. So by transferring into it is actually not for the purpose of the tax exemption, but more for succession planning, because the SFOV will hold it for your next generation and your following generation.
Understand. But definitely there's no concession on corporate tax lah.
No. Corporate tax on the operating company, no. There's only corporate tax exemption on the SFOV.
Yeah, I think if there's corporate tax, everyone will transfer over. Okay. So what you're saying is the 2%, the dividend. So potentially, essentially we can get the 2% exemption from manufacturing. Okay. Why must real property can be included into AUM be in Forest City only? As what you mentioned, to grow the Southern Johor, I think, is there any other reason, Bernard?
No, it's specifically to grow the Forest City. I think it's to build the economy effect and the multiplier effect, so that you really see all the other amenities around Forest City continue to grow.
Right. Okay. Dividends from this question. Are dividends from family office also tax exempt? Will they be subject to dividend tax? I think the answer is it depends on the structure, right?
So they are talking today. SC and MOF is talking to each other. That's why the guidelines has not come out yet, because as and when they were, I think last year, beginning of the year, they were planning to issue the guidelines for it. Then suddenly, when the government announced the dividend tax, they went back to MOF and tried to negotiate to see whether the family members or the foundation that holds the shares in the SFOV, can they qualify for the 2% tax exemption. So this is still being discussed and negotiated between SC and MOF at the moment.
Understand.
And that's why the guidelines not out yet.
Okay. Another next technical question. Can the investment qualified or employee of SFOV also be an employee of the SFOMC?
No, yeah, it has to be separate. You cannot
Understand.
hold a multiple. Otherwise, you just like splitting the one person into two lah.
Right, understand. I guess yeah, if any question from the audience, we're about mindful of the time. We have a few more minutes left. So maybe a question from me to Bernard. What are some of the most common challenge family office, face in meeting this qualifying condition? Do you see?
Actually, few things. I think once the guidelines is out, it will have a higher level of confidence for those that want to participate in this. Because I think number one is it on paper, they're very happy that 90% of the AUM is liberalized. They can also be investing it offshore, and hence, therefore, the relaxation of the exchange control by Bank Negara is also going to be very valuable for them. I think that will increase the level of confidence for them. And number two, I guess, the other bit is that we have foreign source income, right? That is being taxed, but you have the 10 years tax exemption. Then how you invest the 90% of your investments offshore and the income comes back to you, you are not going to pay any more tax in Malaysia. So those two are going to be very important because one is with inland revenue in terms of the foreign source income coming back, but more importantly, the ability to invest offshore 90% of it must come along with the relaxation of the exchange control by Bank Negara.
Yeah, so my last two questions is one question is about, I think you didn't touch on it, the 1.5 times multiplier of the AUM, like certain assets fall under this the promoted assets, if I understand, there's a 1.5 times. I think BR Capital is part of the regulated platform in the P2P. That's why I'm quite interested to know how does the 1.5 times work actually? Thanks.
It's supposed to grow it over time, the 10 years, but the formula and how you look at it and how the respective advisors is going to sign off on the 1.5, right? I think we need to wait for the formula to be prescribed in the guidelines.
Right.
That's because it's a qualitative test. So
Right.
whoever your advisor is going to sign off should be comfortable with whatever formula that is going to be prescribed in the future.
Sorry, when would the guideline be out roughly, or is to be determined TBD lah?
$1 million question, King Sing.
Okay, but we understand there are few companies already set up the office there. All right, so I believe that would be a very direct consultation with the SC, how they managed to set that out, lah. Right?
Correct. So what I understand is those that have established and have consultation with SC, they have been given the conditional approval letter without the tax incentive, because the tax incentive will only be issued upon the gazette of the guidelines.
Understand. We have a question. If the family office declares dividend to the family trust, does the family trust still have to pay the 2% dividend? I think the answer to that question is no, if you are part of that thing, right? Okay. Next question is crypto in foreign, can it be considered in AUM? I don't think it was mentioned there, right? Crypto, right?
I'm checking now. I don't think it's there. But like I said, be transparent, talk to SC. If you have a lot of the crypto and you want to park it in the SFOV, why not? If you already meet the 30 million, why not transfer that as well in for that? If you want that to be under your SFOV.
Yeah, understand. The next question, can the SFO claim for exemption from withholding tax for US stocks? I don't think that works, right? Because anyway, the withholding tax is in US, all right?
So it's in US, it's not in Malaysia.
This is not in Malaysia. Okay, Bernard, thanks a lot for your time. I think we already reached our 11:30 slot time. Really thank you for your advice and your guidance on this. Any last thing that you want to share with the audience? Anything that to how they can reach out to you and all?
I think more important, there are three key players in this kind of structures. It's the banker, it's the lawyers, and it's the accountant. These three must work together to ensure, one, the consultation with SC meets their requirements, and the continuous validation of their activities on an annual basis. These three will always be supporting the SFOB.
Understand. Thanks, Bernard. Thank you so much. Really appreciate your time. Weng Lung, back to you to do the concluding remarks. Thank you so much.
Okay, thank you, Bernard, for that insightful and valuable session. We hope all of you found this session valuable and informative. Don't forget our cashback promotion for Project Eco Tranche 2. You can register at brc.bursamalaysia.com for more investment opportunities. Until next time, stay informed, keep investing wisely. Have a great day.